Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Thursday, February the 11th, 2016. I have the great honor and distinct pleasure of welcoming back to the show managing editor of the News Doctors, Mr. Eric Dubin. How you doing today, Eric?
Oh, I'm hanging in here. It's been an amazing week with all of what's going on, and we'll get into that.
It is. We have a lot of ground to cover, so we'll just jump right in.
What's going on with the institutional sector, where we're beginning to see some of these guys even, let me get this quote here. He's the global CEO, the chief investment officer, CIO, global CIO and head of the global fixed income, currency, and commodities group at JPM. And, for him to come out and say that things have gotten out of control, people have more confidence in gold than paper, quote unquote, is speaking truth. And it's like that William White interview / article that he did with Evans Ambrose Pritchard last month, where the former chief economist of the Bank of International Settlements is coming out and literally using words like Jubilee. When's the last time you heard a banker talk about Jubilee? I mean,
wow.
That's how crazy we are finding this situation to be. And then we're in the end game. This is a process. And you know better than anybody who's interviewed me, this is a process.
Yes.
All throughout 2015, I can't count how many times people within the precious metals pundit and analyst community and newsletter writer community went completely apoplectic about, the crash is going to happen in 48 hours and everything's going to be closed. That's probably not going to even happen on Monday, even though we're having a meltdown in the shadow banking system as we record. Okay,
yes.
It's not likely. It's possible. Yes, it's possible. We all need to prepare for those kind of contingencies. But the reality and the take-home message of what we're seeing today is just, we're in a slow motion financial crash that's probably going to evolve over the course of years, just like 2000 to 2002 and 2007, when, depending on where you want to start your point of initiation, whether it's the crash of the Maiden Lane Bear Stearns funds that brought down Alt-A, which was the tip of the spear that set off the entire chain reaction of the implosion of subprime that brought down the last bubble, or whether it's what we're looking at now, where you have rising dollar over the last few months, last year, give or take, pressure in the oil patch, and pressure on the loans that are denominated in U.S. dollars that have been taken out by countries like Brazil and spread across the entire world. We're talking about a pile of money that has basically come under solvency questions, and we're talking about upwards of $10 trillion. So this isn't some kind of trivial pimple blowing up. It's a serious problem that's been papered over, and media has played a huge role in trying to spin the lie that's coming from the establishment about how everything is just hunky-dory and that there never has been a problem. And just in this last week, we had Yellen, yesterday giving her testimony for I don't even remember what the heck they call it these days. They used to call it the Humphrey Hawkins semi-annual testimony.
They still do.
Okay, good. Well, and I think they were talking about changing the name, but she's talking about how we now have to give serious consideration to negative interest rates, when it was only, December 15th or 16th when they began that whole dog and pony show about interest rate normalization and the propaganda fiesta that we went under for the last quarter of 2015 about how everything was great and the economy was doing great, Christmas sales were doing great, everything's wonderful. And now all of a sudden we're starting to see things like Bank of America last week coming out saying that the transaction rate per MasterCard and Visa indicates that the real numbers for the shopping season sucked, and people buy on credit card whether they buy in brick and mortar or online. So the whole argument about, it's just online sales cannibalizing brick and mortar is completely moot. I mean, everything that we've been forced to just kind of endure as people who are advocating for sanity, whether it's sanity in our monetary system or at an individual level, people protecting themselves by getting exposure to precious metals and whatnot. I mean, the reality is that it's been a very long 4.5 years in this bear market, and things are changing. Today, literally, February 11th, 2016 is an inflection point, and it's a mile marker along the road of this path that we're on, where the implosion in the shadow banking system just reached a mile marker, and a complete shift in psychology. And I think that's going to change the trading that we see in the markets and policymakers in their response going forward. This is going to unfold over the course of a long period of time. We will see major panics, and the baseline scenario includes those scenarios. It's a given that we'll see down days of 5% on the S&P 500 to maybe 20% on the S&P 500, kind of like 1987 style panics. That's possible too, but the baseline scenario is that it's a given that we're going to lose at least 20% from today's levels in the S&P 500 going forward. If not more. If not 50, 70%, if not more. I mean, right. that really is the kind of background conditions we have that support the fanning out of multiple scenarios, and all of them suck.
Well, when I was speaking with Craig Hemke over at TF Metals Report, and I spoke with him last time specifically to follow up with the S&P death candle. And yes. Right now that's where we're at. We are in the middle we're actually on the front end of the S&P 500 collapsing it should collapse somewhere around 50%. Maybe more, maybe as much as 70%. You may be right. I mean, I know that, and it's like you said, Eric, it's not going to happen over the weekend. We're not going to wake up Monday morning and that's going to be the case. Well, what's going to happen is that
we need to be fair to people who make that argument, because it is possible that it could happen. It is possible.
Well, it's where we find ourselves today, I think, is important to reach the new people. I think that we have an opportunity right now. It's getting more difficult for the mainstream media to paper over, to cover up, to lie,
exactly,
to propagandize.
In fact, the guys at the top, like we were just talking, they're beginning to come out because they know that they have to in order to preserve their reputation, or maybe, just maybe, prevent themselves from hanging at the end of a rope. That's how afraid they are.
And they should be, because people are, and I attribute this rising tide of anger to Donald Trump. Love him, hate him, whatever. He's been a voice in this country that has given rise to the voice of people that have been quiet.
Yep.
And I'm not saying that I'm not endorsing him, and I'm not saying that I'm for him. It's none of that. It is the fact that he has been the face and a voice that's been up there and challenging these people who he's been in their pocket. I mean, he looked right at Hillary Clinton and said, you attended my daughter's wedding, or I attended your daughter's wedding because, I had political favor with you.
That's right.
I mean, and when
the guy brags about basically having donated to everyone on the stage when he's been in those Republican debates.
That's correct. I mean, and when you have
about a crony capitalist, at least he's honest about it.
He's honest about it, and that's what people appreciate, and the fact that that we have got to be like you were saying, Eric, in your rant.
My rant.
I mean, we have to do our part, and that's why I wanted to bring you on, was to get into the analysis of what's happening, and that's why I wanted to bring up, the conversation that I had with Craig Hemke, about where the death candle is. I mean, the death candle is very real. I mean, you can go back and look at 25 years worth of analysis, and look at the 25-year chart that he used, and you can see it with your own eyes. I mean, in the last time that it corrected, which was in 2008, 2009, it corrected by almost 57%. That's
Yeah.
real. That's very
And
real. And you can,
we should also point out for the members of our audience that aren't, really schooled in technical analysis, that it isn't that, the death kennel shows up and that thereafter you have a causal chain reaction. It's that the prices of the S&P 500's movement through time can reflect the sentiment of what's going on in the marketplace. And this pattern through history has echoed again. It echoed back in August. And we are in the process of seeing the conventional equities market roll over because it was supported and elevated initially via artificial means.
correct. And that's what Richard Fisher, former president of the Dallas Federal Reserve, came out and said. We front loaded all of this, and now it's in a quote digestive period, end quote. And that digestive period takes a minute. It's not it probably won't happen. It could happen overnight, but it probably won't. The last one unfolded over about 18 months. The one previous to that, back the tech bubble, 2000, 2001, once again, about 18 months. And all of this started back in October of 2015. And some could argue that it started back in December of 2014 when the
S&P 500 is going sideways the entire period that you look at from that period forward. So we hit an inflection point of sorts as well back then. It's just that instead of the levitation efforts from all of this, easy money having a direct impact, it started to fade back in 2014. And as well, we had the drive-by shooting in precious metals in April of 2013 when gold was taken down for more than $250, and then it started on a Thursday, and by Monday of that following week, we had in that period of time, like the 5 minutes after the open on the Sunday over-the-counter market, a gigantic order from Merrill Lynch, purportedly. I don't know that 100% in terms of whether or not it was from their desk, but I have pretty decent information that it was Merrill Lynch at the time that dumped the equivalent of 400 tons of gold, paper gold equivalent, on the market to crash the market and blow everything to smithereens, running the stops. And even, people like Dennis Gartman back in that day had to say, well, gee, there's a concerted seller in the market, and it's probably manipulation. Even people who deny manipulation had to admit it back then because it was just so blatant. And here we are, we're at another inflection point, and
that brings me to my next question. I kind of think that the market is being set up for that same kind of play right now. I mean, as far as the gold and silver market, I mean, they've been allowed to run up, and now today, like you said, February the 11th, 2016, they were unleashed this morning. I mean, at one point there was a line straight up on the chart.
Yeah.
And
it was running at the stops. People who were short or whatever, they panic and they need to move.
Exactly.
So that's the jump that you see in the chart.
So I think that it'll be interesting to see what happens, when the market opens on Sunday evening, to see if these criminals are laying in wait to do the same thing that they've done in the past. I mean, that is their MO, and it wouldn't surprise me at all to see a $100 correction come Sunday night. That wouldn't.
I don't think they'd be able to do that much. Here's the deal. Okay, we know for certainty we can make reasonably educated guesses and try to forecast when and what will happen, but we know that the cartel and the powers that be, more broadly defined, will in fact make a huge effort starting this evening to try to figure out how to put out this shadow banking fire that's going on right now.
Okay.
And sometime they're going to try to push precious metals down because that's actually a requirement amongst the things that they have to get done to put this fire out.
Okay.
And next week, I fully anticipate, just as you're alluding to, that we will see some kind of an attack on gold and silver. But I don't think it's going to be $100 on gold, because I don't think they have the ability to actually execute a kind of attack like that, and that we will not see something like what is analogous to the April 2013 period. They've this market too much, and even their tools to be able to control it are now weaker. And that's not a hypothetical analysis. It's just a fact. The gold available within ETFs has been halved because they already drained them. The gold in COMEX is a joke.
3.5
Who
times.
the hell knows what's going on over there? I mean, the amount that's registered relative to open interest trading in any given month has now gone into Looneyville.
Yes.
And people make ridiculous arguments about how, well, you can just flip from eligible to register to the push the button, and therefore there's no problem, move along, nothing to see here. But, the reality is that we do have a problem. That
Yes.
It used to be a ratio level around 50 to 1, and it was that way for most of the entire last decade. And all of a sudden now we're, Looneyville of 500 sometimes. They cannot do more than just dump a mountain of paper and hope that changes and breaks psychology. Because what we saw in 2011 through basically all of 2015 was multiple rounds of various tools being used to keep the precious metals down, and a number of those tools are no longer available to be used in quite the way that they were used before. Another thing too that's really fascinating, I was thinking about this morning, and it kind of hit me like a ton of bricks. When you look back in history and what happened with the last mega bull and lines around bullion selling dealers and Scotiabank and Canada, et cetera, that was in 1980. That was at the end of the bull market. We're just beginning the third and final phase of this mega bull. And bull markets tend, generally speaking, to move in three phases. You get the stealth phase, the smart money, people buying in 2000, 2001, all the way to 2004, 6, 2005 or whatever. And then a real chunk of the core of the bull market runs, and that's what brought us to 1921 or so at the top for gold in 2011. And we're now, as of roughly, I don't know where you'd want to start it, maybe December of this last year, beginning the third phase. That's where we are. And it could be just a complete barn burner in terms of what we see on the upside. And it speaks to the degree to which the system was so screwed up for so long that individuals were able to basically be in denial longer than anyone could have possibly imagined, myself included. And now that we have reached this inflection point, that's the underlying background fundamentals that have created this really, really, really unusual situation where even before you have the blow-off, I mean, again, market historians will know what I'm saying is absolutely true. The last stage of a bull market is when you have the biggest gains, and it's in the shortest period of time, and it usually has the masses jumping in and moving the market forward. We saw that in the NASDAQ as well too.
At the very end.
At the end, it did. I was at the absolute apex of the technology bull market in the 1990s. I was on the buy side. I wasn't on the corrupt sell side, and some of those jackass analysts literally got fired or fined or went to jail for the lies that they were telling. They were telling people, the joking behind clients' backs and private emails within the company shop about, this is just but the day before they said they'd put out a buy order on it. It's just, we are at a stage now that's analogous to what it felt like when the NASDAQ peaked in March of 2000, and it was only a month later that we saw huge down moves in the stock market. Even by May, June, July, people back then were still in complete denial. They were hopeful. There was even compared to ways that you feel now when you look at the media and the headline stream and get a sense of what the talking heads are saying on TV and whatnot, I firmly believe that, August of this last year was analogous to March of 2000, where the NASDAQ peaked in March of 2000, and in August of 2015, we experienced all of that craziness in the shadow banking system in Europe, requiring the Federal Reserve to dump treasury collateral into the global marketplace to the tune of $500 billion. It never happened before, ever. That was such a standout in terms of market history. And it also, going back to what you were talking about with Craig, the same exact period and all the turmoil within the financial markets created an excess of a 10% downdraft within the S&P 500 in a short period of time. We kind of forget about that because we bounced back up so much since then. With the reflation efforts and so forth of the global central bankers doing their dog and pony show. But truth be told, that was the August period was pretty darn similar to March 2000, NASDAQ peaking, different markets doing different things, of course. I mean, they're not directly comparable, and I'm not making that analogy. What I am making an analogy of is sentiment and where we are in the cycle. And it's eerily feeling like we are now in the equivalent of the June, July, August moment of 2000, where people in the institutional community were recognizing, we've been lying about this stuff for too long, and it's coming to catch up with us, and the markets are rolling over. We have a mega bear, and that's when everything starts accelerating to the downside.
Now, what's happening in light of all of that, Eric, and you've mentioned the shadow banking problems on a couple of occasions. What's happening with Deutsche Bank, and what role does Deutsche Bank play in what we're seeing happen right now? Once again, I want to try to keep everything focused on today because today is such a huge move. Like I said, gold is a thermometer, and the thermometer is going ballistic. So what's happening? I mean, Deutsche Bank, they've lost more than 50% of their stock value within the last 6 to 8 months in a very, very short period of time. And what role are they playing in all of this? Because aren't they like the second or third largest bank in the world? I mean, they're in the top.
They're in the top 10, and then if you look at it from strictly the derivatives that they hold, they're right up there with J.P. Morgan and Goldman Sachs. Goldman Sachs probably still has the largest outstanding book in derivative space. I haven't looked up their numbers recently, but you're talking over $70 trillion of notional value of derivatives position for Deutsche Bank, and then on top of that, they have impaired loans. They are the primary creditor and also derivatives issuer for companies like Glencore. Glencore's business has been falling over. In fact, I was looking at Glencore recently and noticing that if you compare the news front and how it's evolved over the last 6 months with Glencore and their stock, and then look at how it translates to the banking sector, there's about a 25 or 40 some odd day, depending on the last two instances, where you literally have a 20 to 45 day or 25 to 40 day transmission lag between deleterious news bashing Glencore and eventually translating through the consciousness of the financial market participants to the point of pressuring Deutsche Bank down. And as we have been in this cycle of deflationary crashes, multiple in fact, whether you look at what the energy sector has been doing or the pressuring of the global third world debt or on and on, companies like Deutsche Bank, who are in fact the at the center of the financial universe at which this shadow banking operates. The mega banks are in fact the hubs of this network. They're taking huge pain. The solvency threat to Deutsche Bank is real, and as a consequence, their stock is lower than it was back in 2008.
Oh my!
After the crash of 2008, which killed Lehman Brothers, killed Bear Stearns, imperiled Goldman Sachs, and would have killed them were it not for the Treasury Secretary Paulson, who, former CEO of Goldman Sachs, executed a bailout of AIG and saved Goldman Sachs bacon, because Goldman Sachs was exposed to the tune of billions of dollars of counterparty exposure to AIG. AIG is kind of like AIG is kind of like Deutsche Bank of today.
Okay.
That's the analogy. And whether or not they ultimately fail, or whether or not they get bailed out, or all of these various scenarios that can come down, the reality is that they're the tip of the spear when it comes to the problem and the earthquake moving through the shadow banking system. But I don't want to overemphasize that. And Dave Krensler does a great job of also pointing out that people are paying too much attention to Deutsche Bank. This problem has metastasized throughout the entire too big to fail segment of the global financial sector. And then as well, like I described with Jason Barak on our show last Friday, we have the piranha problem, where a lot of the smaller regional banks in the oil patch, or maybe it's an institution internationally that's got heavy exposure to third world debt, like a Bank Santander in Spain. Those are big banks. They want some kind of chain reaction like that, and that was the fear actually most profoundly when it came to the question of Greece and whether or not you'd see a domino chain reaction within a shadow banking system. It would be, what stupid bank had too much exposure to Greece and got stuck, So here we are. Deutsche Bank is the poster child for what problems ail the shadow banking system.
Okay, and I want to go back to the Heta Bank. What are the odds that when that Austrian, very small Heta Bank with lots of derivatives exposure to German banks, it rolled over?
Yeah.
Blew up a bank in Germany about 2 weeks afterwards? Is that what's been smoldering underneath all of this? And is that what's bleeding out into Deutsche Bank and causing them all these problems?
Yeah, and a nice analogy for folks that are not in the financial sector to think about is, if you imagine tossing a rock into a pond and you see the ripples going around, what we got going on now is that there's probably about like one giant bowling ball that was flung out into the water, and that's Deutsche Bank. Okay? And
exactly.
Lots of other rocks, which are the individual examples that one can dream up that point to the same problems on a slower scale or smaller scale or regional scale or what have you. And they're all happening. It's all of the above. And that's really the problem. And we're not getting out of this. That's the other take-home point. There's no way to fix this. The only thing that can ultimately fix it in the long run is forms of debt jubilee, as Mr. White was talking about, and currency resets and financial market realignment based on all of the above. And the reality is that kind of necessitated changes don't happen until you get a crash, because that's just the way human culture works. Humans, and you can get layer on top of this analysis a conspiratorial frame of reference, because that operates too. There is an element of that going on as well. But frankly, at the base level, humans making individual decisions can't deal with these kind of realities, and we end up with normalcy bias and denial.
Right.
Even at the policymaker level and oligarch level, these bozos at the very top, they're human too.
Right.
And they're making the same mistakes because of denial about what's going on, and they're going to get hurt as well. This is nuts.
They're as paranoid and uneasy as you and I.
Oh God, no! It's worse. I mean,
Probably
would
worse,
you like to hang out with Hillary Clinton because she's a nice person? I mean, geez, it's like you're the old fable of the scorpion needing to get across the river, and Hillary is the scorpion.
Yes, exactly. I mean, and that's well, this
and all of our leaders are like this to greater or lesser extents. I have had the fortune of interacting with a lot of people of power in my life, and it's given me a lot of insight. And quite frankly, a lot of times when we look at these things and we get all wrapped up about, New World Order conspiratorial analysis of what's really going on, and I'm not poo-pooing that because that does, in fact, enter the picture.
Yes.
We don't give enough appreciation to the fact that humans are just humans, and humans don't like pain, and normalcy bias and denial are very powerful, and they, in fact, are part of the reason why, as a culture, as a society, with our financial markets institutions as part of a culture, that's why we keep going through these crazy cycles, in part because people at the top are just absolutely, completely deluded, blind, and a lot of them aren't even paying attention. A lot of the people in the oligarchy are just going along to get along. They don't know jack. They're dumb.
Yes.
They're inherited money. They don't know what the hell's going on. They're too busy sipping their martinis and playing polo or whatever. The worst case scenarios of the shit hit the fan scenarios are totally things that the elite are planning for, because they know that it's a reality that they have to plan for, because it's a reality of the insane world that has been built up in part by their own doing. And they're deluded because there is no escape. This whole notion that we can separate ourselves from our fellow man, whether you're a billionaire or not, or a trillionaire or not, is a complete illusion. And that's one of the sicknesses of humanity as from a cultural point of view. That's just pervasive. And I don't know. Hopefully we will have enlightened leaders and oligarchs that even if they're a sociopath and a psychopath still can pursue their own self-interest and self-preservation. Right now we got psychopaths running the damn world, and they don't even realize that they're about to hurt themselves.
Right. And
they think that they can be immune to it. And that's part of the hubris and the problem that we have.
And it's a big part of it, because and I think that once again, I want to go back to Trump. I think that's what scares these people to death, is the fact that he is giving rise to a voice that's been quiet.
Yeah, and it's kind of like a two-way street. Yeah, it's the people that are giving rise to the Trump. It works both ways, and it's the same thing for Sanders too, but with just different politics.
Exactly.
People are pissed.
People are pissed.
There's going to be a backlash even against people who point out the truth, like you and I do, when it comes to the financial markets, and you already see it. I mean, we're not far away from some kind of capital controls where they may some kind of war on gold and possible cashless society if we have a total crash. And who are going to be considered terrorists? It's people like you, or tell the truth.
Yep.
People like me who's, spotlighting what's really going on here, because the only reason why our system is still functioning as it is, as wounded and as wobbly as it is right now, is because confidence hasn't been completely destroyed. And the only thing that the oligarchy fears more than anything else is the absence of confidence and everything falling apart. I mean, we have an edifice here that's so unstable and so unaware to most people. Most people just are not aware of how insane the financial markets have come down, and where we are. We're standing on a gigantic amount of potential energy that could create scenarios greater than the Great Depression's crash.
Yes, that's one of my biggest fears, is that we are on the precipice of the Greater Depression that's going to make the Depression in the 30s look like a Sunday afternoon in the park, and it's going to be much larger and much deeper and much longer than that could ever even possibly even begin to. I mean, that's it's going to look like nothing. I mean, because it's going to be the scale of it is going to be global. It was global before, but not the rest of the world wasn't hit as hard as the United States. It was hit pretty hard, but when But when this thing falls apart completely, unless there are stopgap measures that are in place right now, like a jubilee, and even that's going to be messy. Even that would be incredibly messy, unless there is some type of new currency that's already in place that we are unaware of. Then this
No,
thing
it's not. It's not in place now. There's
it,
nothing in place now.
no, I understand, but I mean, I'm just saying that's we don't know what these guys are capable of. We don't. And I'm not going to sit here and pretend like I do. I don't know what they're capable of. I know that they are criminal on a level that I can't even begin to fathom.
Unfortunately, I got a pretty good idea what they're capable of.
Well,
you don't want to know.
Well, I mean, we can see what they're capable of to a degree,
Yeah.
but as far as what they're able to hide, that's a whole different thing. And,
Yeah.
and it doesn't, we don't know what they've got hidden. We don't.
Well, that's not really entirely true. We actually do have a pretty decent idea of the contingency plans that are sitting on the shelf that they may, in fact, pull off the shelf and execute. And I can illuminate what those are. Before I do that, well, and you probably should edit this out too. The primary toolkit includes the resetting of debts and resetting of the international currency system, and they've been planning this as a contingency for years. And it's something that will be called upon if we have a Great Depression financial crash. That's just a given. It's going to happen. We already went through this many times in our past, and in the United States, we've even seen it.
Yep.
It's what happened in the 30s. We had a revaluation of the dollar, which was tied to gold at that time, by 75%.
Yep.
It's a huge move downward in terms of the purchasing power of the currency. And for a number of years, that actually did refloat the entire global financial system, but certainly the United States. And we're going to see that again if we have the scenario where the shadow banking system dominoes begin to fall at a rate faster than the policymakers can sequester the chain reaction. And I think the probability for that is extremely high, and that it's going to probably unfold in the next 18 months.
And they're not going to be able, when it starts falling, they're not going to be able to control it, period. They may think that they can, but they're not going to be able to, simply because
it'll come in fits and starts.
Well, and the thing is, Eric,
sometimes it'll look like they'll have a grip on things, and 1 week it'll look like their bullshit propaganda is working, and then the next week all of a sudden everything starts falling apart again. The acceleration to the downside accelerates. Forgive me for being redundant. And then that's the pattern. Look at 2008.
I'm talking about the derivatives, and as far as the counterparty risks that are involved in the derivatives, and once those things start coming unchained, they won't be able to control that, because they won't know that XYZ derivative is actually not connected to what they thought it was connected to. It is in fact connected to something else that they are completely unaware of, and what they were unaware of just blew up, and they're not going to be able to contain that. Oh, and that thing that just blew up, it was connected to not what we thought it was, but this other thing over here that just blew up. And oh my God. So now all of a sudden you have all of these different financial markets, these different institutions that are getting hammered on the backside, and they're not going to be able to control that at all.
And that's what will happen. And forgive me for constantly going back into history, because I am tying it to the present, because it's important to see things like this. But that's what happened in 2007, 2009.
That's exactly right.
Periods where the policymakers looked like they were under that they had a grip on things, and that the markets weren't going to evolve in a domino crash. And every once in a while, you'd get some kind of an inflection point, like Bear Stearns blowing up in February of 2008, and all of a sudden the fear ramps up again. And people begin to think that, well, maybe things are going to fall apart, yet the policymakers still, even then, after an institution the size of Bear Stearns goes down we're still able to hold the system together. And to make this point crystal clear, we still were in an inflationary commodities blow-off top even after Bear Stearns. We peaked in the global commodities market with West Texas Intermediate hitting 147 or something like that.
Yep.
In July of 2008, months after Bear Stearns croaked. That, a lot of people forget that. And now, when you look back at that period and try to understand the context and the moving parts of the financial market back then and what it was responding to when it comes to the macroeconomic conditions and on and on, the whole milieu of what was moving markets back then. And the question of the shadow banking system back then has a message for us today, and that's the point I'm trying to make.
Okay.
When we were in 2008, it was only until July by July when basically the Chinese forced the issue of the United States backing up the agency debt of Fannie and Freddie Mae, the mortgage debt. And the United States came out on a Sunday, the Treasury Department declared that they were going to backstop the debt of Fannie and Freddie. That's when the entire global community had the aha moment, just like what they're going through right now, that this deflationary cycle is real. It's so bad that the Federal Reserve and the Treasury Department are willing to nationalize, in effect, Fannie and Freddie, and we need to wake up and realize that the music has stopped, that the realities of the Fed no longer having our back, even though, ironically enough, they were actually taking on the risk and assuming the risk and nationalizing, in effect, Fannie and Freddie. But the reality, the take-home message to the traders and the investors and the 95% of the money managed by people who basically wait for the signal of the music stopping before they try to go and grab their chair, that was the catalyst. That was the inflection point. Don Cox, back in July of 2008, had remarked at that time saying that it was the Midnight Massacre and that the central bankers and their teetoters and martinis sipping folk in Basel, Switzerland, hanging around the table, the boardroom, and the Bank of International Settlements made a decision and called the Fed as well and said, hey, you got to do something about these agency debt and the position that it represents in terms of blowing a hole in the shadow banking system. And all of a sudden, months later, we begin the wild ride of the 2008 crash. And by October, we, hit yet another phase of the downturn. We're similar to that right now. Literally, the day you and I are talking, the world right now, the reason why they're lining up on the streets in London to buy gold and the retail people are participating in that. And again, remember how unusual that is, that it's happening in the beginning of the blow-off third phase versus the end. We are seeing the William Whites come out and talk to Ambrose Ambridge Pritchard with a message of complete and total despondency of the idiocy of which our shadow banking system has evolved. We have, Fisher in December talking about having stolen forward demand and that this whole wealth effect and charade that the policymakers have been running is just that, a charade. The world is waking up to the reality that we have, in fact, had a charade for financial markets and that the real economy has sustained artificial boost to its demand because of the wealth effect temporarily having an impact on the real economy and creating all this massive amount of malinvestment and the craziness in the shale patch, for example, in the alternative energy spaces, solar and all of it. It's because of cheap money and people making investment decisions that aren't rooted on whether or not, they're good business managers. And I've gone on a lot of different tangents here, but the reality is that's how hyper-connected all of this stuff is.
Yep.
And we're now at a phase where I think we literally this week are going through an inflection point that a year from now, people are going to look back in history and like I described, March of 2000 and what it felt like back then, and how this reminds me of what we've been going through now. I think that people are going to come to that realization with the benefit of 2020 hindsight. And I don't know how bad things are going to get. I know that things are going to get really bad. That much I know. And I know that this system can't be fixed, and that it's just a question of time as to what path is what we see unfold in terms of these multiple dynamics interacting with each other, and policymakers reacting thereafter and changing subsequent development. This is such a complex dynamic that we're looking at, but the reality is that the problems are so vast that there's no escaping pain, and that is what it boils down to for the average person listening to us right now, because they can hear all this and it's depressing.
Well, no, now hold on now.
But it's empowering at the same time.
Exactly, because and I want to speak directly to the audience.
Please do.
For a second, because
I've been blabbing too much.
What Eric has just been describing is rooted in history, and it's rooted in recent history. In the 2007, 2008, 2009 time period, each one of us that are participating in this conversation, and that includes you, that is especially you, the audience, you remember what happened. You know what happened. You can look at and you can apply what happened then to what is happening right now. It's the exact same thing. There's different players. Mm-hmm. There may be a different location, but it's
different industry segments are screaming pain.
It's
the shale industry.
It's the exact same thing. It's the same thing. So do the opposite of what you did back then. Because if you suffered losses the way that I suffered losses, I'm doing the exact opposite. I'm not a financial advisor. I'm not telling you what to do with your money, not advising you on what to do with your money at all. I'm just saying that if you look back and remember what happened, there's an opportunity. And as Mike Maloney has been saying for years, right now is the greatest opportunity in the history of mankind. Why? Because we're getting ready to go into one of the worst financial situations in the history of mankind. And what are we going to do? What are we going to do about it? What are we? What is Eric? What is Rory? What are you, the audience? What are we going to do about it?
Yeah.
How are we going to protect ourselves and protect our families and make sure that when all of this poo-poo hits the fan and it's on its way, it's traveling right now. Well, and I can't overemphasize the fact that today, February 11th, 2016, the beginning of the third phase of a gold bull market, people are standing in line to acquire physical gold. There's a man at the top of the heap at J.P. Morgan coming out and saying, this is a sham and a scam, and physical gold is where it's at.
Well, don't overstate the case. I mean, he didn't say that. He's still trying to basically spin and control the situation, but he is speaking the truth. He said, quote, things have gotten out of control. People have more confidence in gold than in paper. He's not literally saying, that the system has burnt it down or is burning down and you folks getting the gold are making the wise decision. He's still doing the public relations stick.
He's just covering the bases. I mean, he's
covering his ass.
He's doing the lawyer talk. He's doing the lawyer talk. I'm doing on the street talk. Big difference. I mean, you can put as much lipstick on that pig as you want. Still a pig.
You and I have talked about this a lot, and as far as like how people should prepare, and I have a relationship with Silver Doctors, and then Silver Doctors, the parent company, Doc Investments LLC owns SD Bullion, and they sell bullion.
Yep.
The bullion's great. I think bullion is really important, but bullion isn't the be-all and end-all, and probably the majority of the people in your audience don't have the financial wherewithal to squirrel away a ton of money or anything. What most people need to do is diversify, and try to get as much out of debt as possible, because debt is really dangerous in a deflationary crash. Try to store as much food as you can. Try to think ahead in terms like doing a creative analogy or a creative exercise. So what would your life be like if you didn't have an electricity for a week? And I'm not saying the power grid is going to go down. I'm saying do that exercise of, if only mentally, to challenge yourself to think differently about what you need to do in your life to make yourself more insulated from craziness around the world.
That's correct. That's it. That's a big thing for me. I mean, because yes, gold and silver, they're great for the other side, but during
they may not even be monetizable in terms of significant purchasing power on the other side. Barter, yeah, okay, it's always going to be able to be bartered and whatnot. And then whenever I make the argument about saying you need to have some mining shares, you need to have some Exxon Mobil or whatever, just some stock that's completely outside the system and in your own hot hands, or the corporate registrar of the corporation itself. People, you can literally buy Exxon Mobil stock from the company itself and not be involved with Wall Street. Right. You can't, and they have, hard assets under the ground. And yeah, okay, it's very likely that you have excess profit taxes and all the other craziness that happens when, in fact, you get a new bull market in oil or whatever. And governments are dangerous when it comes to your financial solvency holding stocks too. Yeah, I get it. Okay, it's a paper asset, but it's also a quasi paper asset with rights to the assets that are held underground by Exxon Mobil or whatever. And I'm using Exxon Mobil as an example simply because it's such a large company that no one could possibly accuse me of trying to move the stock by talking on this little podcast about it. Think bigger, folks. I mean, the stacker community is a little bit dogmatic when it comes to their relationship with precious metals. People would be wise to remember that under extreme volatility, extreme uncertainty, extreme conditions of economic turmoil, diversification is your friend.
Yes, and diversification within your home. And like Eric was saying, do the mental exercise of not having power for a week, not having water for a week, which means not having anything else for a week. Go through that. Highly recommend it. Get, if you're not sure of where to start, a great starting point would be Tess Pennington's The Prepper's Blueprint. It's a great book. Goes into an unbelievable detail about what to do, when to do, how to do, and where to start, more importantly. And she helps you to understand why it's important. It took me a long time to convince my wife that I'm not talking about people dying. I'm not talking about us being dead. If I'm dead, it doesn't matter. It doesn't. Being prepared is not about death. It's about thriving. It's about being able to.
It's also normal. Well, it used to be part of our normal history.
That is correct. And the thing is that your stress levels come way down. I mean, if you go into an unbelievably almost unimaginable scenario where your emotions are completely wrung out, your mind is completely wrung out. If you have the tools that can bring calm to your emotions, that can bring calm to your mind, it's going to be a lot easier. I'm not saying that it's going to be easy. I'm just saying that it'll be easier, because if you can't think and if you can't hold yourself together, then you're just going to be a grease spot on the street, period. I mean, and I'm not trying to be ugly. I'm just being straight about it. I mean, that's just the truth. I mean,
it's always easier to deal with high stress situations when you've done a little bit of planning in advance.
That's correct.
And you also end up creating more ability for maneuverability by figuring out ways in which you have more self-reliance and self-sufficiency to the point where you can make different decisions when everyone else doesn't have the luxury of making those decisions because they didn't set in advance a little bit of money squirreled away in cash. When all this financial crash happens, the greatest purchasing power is not going to be for silver and gold in the initial months. It's going to be for hard cash because the ATMs won't be on.
They won't work. So do you have some cash?
Folks in our audience, have you put away the equivalent of a month or two of savings? I mean, even if you have debt, it's still wise to not put every single dollar towards your debt payment and cracking down on your debt service. Having a little bit of cash might be something that would work well for people. The bottom line is that diversification and planning ahead is really the best way to approach what's coming down, and not being dogmatic. It drives me crazy how people are so dogmatic in my industry. Oh, you can't hold stocks because it's just paper. I mean, what is this nonsense?
Yeah, that makes no sense whatsoever.
Again, I don't want to overstate it, because obviously there's a core argument that people are making in defense of that makes perfect sense. There's a certain degree of truth to what they're saying, but the reality is that we have a huge degree of uncertainty ahead, and diversification is important. And dogma is a recipe for death in the kind of scenarios that we're talking about, because if things go in directions that aren't 100% predictable, how on earth can anybody know that they're dealing with absolutely everything in advance, that they had prepared for everything? You cannot prepare for everything. And people understand that when it comes to like, oh, gee, I need a little bit of mix in terms of the foods that I store because some might go bad or bugs get in or whatever. The prepper gets that when it comes to how they stack food, but they don't, or some don't get it when it comes to how they stack precious metals.
Or when they're just stacking, just trying to take care of, trying to walk through, like you said, the mental exercise of walking through different scenarios that you're going to encounter. I mean, I've finally gotten through and made some headway with my wife to get her to understand that it's called everyday life. I mean, and if I were to fall down and break my leg, that's an emergency. That's a situation. Do we want to be in? Do we want to have the financial burden of me not being able to do anything for 6 weeks? Or do we want to have some kind of buffer to be able to deal with that? What about an auto accident? What about any number of things that happen, that occur in everyday life? It doesn't have to be cataclysmic. And all of these things, and just thinking through them to be able to get to the other side, to have some kind of buffer to where when life happens, you're in a much better place. Like I said, the mental anguish, the emotional anguish, those all come way, way, way down when you have a little bit of extra food, when you have a little bit of extra water, when you have some cash on hand in order to be able to function, because you may have to live on delivered pizza for a week.
And it's also, Lori, not just the near-term risk factors, but it's also the question of what happens to get on the other side.
Exactly.
And diversification is important on that side, in that question and challenge as well, because for all we know, gold may not be legal to transact in the United States, or it might have excessive profit taxes, or who knows. And the same can be said for mining shares, and I recognize that. But diversification is important. And I don't want to belabor the point, but our industry has a huge amount of dogma when it comes to preaching to people, oh, you just have to be in physical metal and you're perfectly safe. And, this is coming from somebody who has an affiliation with a bullion company, okay? I'm not talking my book. I'm talking what's right for people.
Right.
And the dogma out here is so insane that people just don't hear this message. I've been saying it over and over again, and frankly, I don't have a lot of luck waking a lot of people up, and people get mad at me for saying these kind of things. But the reality is that, if you own and I'm not going to name names, but if you have a really high quality, top quality mining companies. There are companies, and I'm not going to name names, but if you go and you look in the charts and you compare what happened from August of last year to today, you'll notice that there are a number of very high quality gold mining companies that have been doing something really unusual. They've actually been going up while everything else was going down in the last, quarter of 2015. And the reason why that was happening is because the smart money knows exactly what I'm trying to express here to folks, that these vehicles are part of the overall the overall portfolio mix that will help people get to the other side of any potential currency reset, monetary reset, etc.
Exactly.
And this is really, really important.
It's really important. So, and I think that we've left him with something to think about and something on a positive note. And been speaking with Eric Dubin, who is the managing editor over at thenewsdoctors.com. And you can find all his great analysis at the News Doctor. He's got his own tab. Just look for Eric Dubin, and it'll take you to all of his work. And Eric, is there any? I'm sorry.
It's over on the right side of the page, and there's names like the Daily Coin and Kranzler. I mean, all of our mainstay contributors. You will find a name or of the person or the organization over on the right column, and you can click and pull up all of the work. And I index everything I do, whether it's an interview over at Silver Doctors or this interview or what have you. It'll all be indexed under my name, so you can find it pretty easily. And I'd recommend everybody check out as well the interview I did with Jason Barak back, I think we recorded last Friday. It's been such a whirlwind, I don't even remember when we recorded. But we talk a lot about the macroeconomic, global macro, shadow banking, energy sector, global third world debt problems that we touched on in this call, but we go into a heck of a lot deeper in that call, and I really recommend people listen to that. We talked for almost about an hour. And a lot of times, because Jason and I both have been dealing with health issues, and with a lot of people probably already know by now, I contracted Lyme about 7 months ago, and I'm finally getting over it. But a lot of the shows that Jason and I did weren't just average shows; they weren't that great. This last Friday show was a really nice show to listen to. I think it's a good example of when he and I have some pretty decent chemistry and we're actually healthy and able to think straight and help people see what the hell is going on in our world. So check out that show, folks. I highly recommend it.
I'll put a link below in the description below this video. So,
and Kranzler's coming on Friday for the Silver Doctors Weekly Metals and Markets Report. I'm really looking forward to chatting with him because all the old geezers of our community, myself, I'm doing this like 25 years or whatever. In the most rational, insane people, generally speaking, in finance from the traditional world, are the folks that are in the credit market side. He traded bonds at Bankers Trust. He knows what's going on in the shadow banking system. And I have a feeling that show is just going to totally rock. So
yep.
We're sitting at an inflection point right now. We're all trying to wrap our hands around the elephant and figure out what the hell the elephant is. And some of us are calling it a rhinoceros. And but we are literally in the precious metals and alternative asset space when it comes to media covering what the hell is going on in the financial world right now. We are literally at the tip of the spear watching history being made, and this week is an inflection point.
It is.
So buckle up, folks. Going to be a crazy year.
That's it. Well, Eric, I certainly appreciate all your time this afternoon, and we will get you back on in very short order to follow up with, keep a close eye on this. As far as what's going on, how this whole thing is unfolding, because I get the feeling that there's going to be some pretty major gyrations in the not too distant future.
Yeah, and where there's great crisis, there's great opportunity, and that
Exactly.
even includes social evolution from the biggest perspective of all, our culture and humanity. And who knows, maybe some kind of cataclysmic event ends up forcing the issue of us graduating out of kindergarten and moving along to humanity's first grade. We could use some, evolution in terms of our way in which we're managing our world. We made a hell of a mess.
Yes, we have. Yes, we have, and it's high time that we did some major league growing up. So, well, all right, Eric. On that note, I will talk with you soon, my friend.
Great chatting with you, Roy.
Same here.